What's up, everybody? We're back with another episode of Bullish Chips, where we use a proven and repeatable strategy to make money every day. This channel happens to focus on the Bullish Semiconductor ETF, which goes by the ticker symbol SOXL, but the charting method and the trading method that we use can be implemented with any company that's publicly traded in the US stock market. So make sure you hit that like button if you haven't already. Hit the subscribe and notification button as well. That way you're alerted to when we release new videos. We do release bonus content from time to time. Thanks to all those who continue to tune in. It really helps the channel grow, and welcome to those who are new to the channel. Now, the nightly and weekend videos, like tonight's video, focus on identifying triggers and targets for trades ranging from, scalps and intraday trades up to long-term swings and leaps as well. So if you want a deeper dive into exactly how we set up our charts with the broadening formations, levels of support, resistance, things of that nature, make sure you check out the bonus content on our YouTube page. We've got a couple of videos that dive deeper into that for you. And if you're not familiar with the strat, make sure you check out the link in the description of this video for a free quick reference PDF guide. Gives you all the basics for the strat. Touches on broadening formations as well. So give you a good start if you're not familiar with it. There's a huge strat community out there, so plenty of information out there on the internet for you. I encourage you to watch the full video, right? Because we do go over all time frames, so we give some pretty good insight. And let's go ahead and take a look at the agenda for today. Just a heads up, I do have a little bit of a I guess I should say allergies are kind of kicking my butt today, so throat's a little dry. Apologies if there's any coughs. I'm trying to keep some water here next to the microphone. That way I can, wet the back neck, as they say, to make sure I'm not coughing all over you guys. But for today's video, we'll go ahead and recap the price action from today, Monday, April 20th, before we zoom out like we always do and take a look at the week, month, quarter, and year price action. Then we'll zoom back in to take a look at what we call our 4-hour markers, as well as the triggers and targets for Tuesday, April 21st. We'll also do a quick review of the triggers and targets for the week, month, quarter, and year as well. So let's go ahead and jump into the charts, starting with the 5-minute like we always do. That's how we take advantage of the proven and repeatable strategy that we use. That strategy is looking for the opening print, which is the first traded price of the day, and watching for higher lows or lower highs in relation to that opening print. If we get higher lows at or above opening print, then we want to look to get into calls, targeting overnight high and previous high a day. If we get lower highs at or below opening print, then we want to look to get into puts, targeting overnight low and previous low of the day. So here we had an opportunity for a little bit of downside action today. Depending on where you, what your triggers and targets were, as far as selling the contracts or selling anything that you had purchased, that is up to you, right? But we did get the trigger, which was we had the opening print here, basically at overnight high, and we pushed down. We made a lower high. As soon as we made that lower high, went 2 down to make this a lower high. Then that was your entry. Pushed down, did get a higher low, but then got a lower high, lower low, lower high. Lower high here in relation to this high, and that's where things kind of dropped off. We hit that 200 fib extension from the red 3 over there on at the beginning of the rally that we had over the past 2 weeks. So that was a bounce point. But if you waited for the higher low, higher high exit, there wasn't as much. I think it was right here. There we go. That's where the higher low, higher high came. So your exit would have been, right here around 94 flat. The entry was here around 94.63. So not a whole lot there, but if you were at the money, in the money, had multiple contracts, then you could have made a decent profit. We moved sideways here, and then we made what we were looking for, and that was the higher low on the 1 hour. That was that push down here. Then we finally went above and locked that in as the higher low here around these candles. Let's go ahead and go to the 1 hour time frame. Remember, we talked about in the past that if we do get action to the downside with the rally that we've been having, don't get too far over your skis. Don't think we're going to make these huge drops until we make some type of lower high on a significant time frame, the 1 hour, the 4 hour. Then these pullbacks are going to be pretty light, right? We're just in this rally, this face ripping rally essentially, and you just got to kind of get in where you fit in and manage your risk accordingly, right? And so here was that 2 down on the 1 hour time frame, and then finally at the end of the day, or second half of the day, that 12:30 candle went above the high of that 2 down to lock this 2 down in as a higher low. And we're not counting this soft higher low here. We're looking for a concrete higher low. We talked about that in the weekend video, and actually in Thursday's video as well. We have these soft lower, higher lows here, but we were really looking for a more concrete one, which would be a 2 down instead of a 3 or an engulfing candle. So we got that 2 down, triggered this 2 up. So went ahead and entered some contracts here. Target was overnight high. And let's go back to the 5 minutes so we can see. Right, target would be opening print, which is overnight high, and that's basically where we went up to. Right, there we go. Flashed above it, came in here, got this lower high. As soon as this candle went below the low of this lower high right here, that really locked that in as a lower high, and that was the exit for our short term contracts. We did add to our May 15th position as well. Remember last week we started a position for the May 15th expiration. Again, aside from that, because of this rally, we really only have our the rest of our 2027 contracts, and then the 2028 contracts. So we bought when they were released. What was that? Was it first quarter of this year, or it might have been fourth quarter last year? I can't remember when. But yeah, we only have those as far as swings. So everything else has been kind of day-to-day trading, just because it can be a little bit dangerous buying at highs, right? We need like I said, a pullback on a significant time frame to give us that solid higher low. And we'll look at the different time frames here in a second, but from the short-term time frame, there was a little bit of price action to the downside to capitalize on, and there was a little bit to the upside as well. But overall, just a sideways day, as you can see here. So, position hasn't really changed. We're bullish as ever. So, just want to kind of keep that in mind. Let's take a look at the 4-hour real quick. Right. So today, we did have the first 4-hour candle was a bearish engulfing candle, but it was then, you could say countered by an inside green candle, a solid green candle, not really any, not a lot of wick at the top of the candle. So finished in the upper third of the first 4-hour candle. So that would lend itself to be more bullish consolidation than anything bearish, right? Yes, there was the engulfing candle, but the following candle was pretty bullish. And the underlying indicators, the internals for QQQ are reflecting that as well. So just continuing to push up on the 4-hour time frame, and you can see again just a face rip and rally. The only we've had this soft higher low, soft higher low, soft higher low. We don't have any real concrete higher low in this push essentially up, without looking back, right? So if we were to get a 2 down, and then lock that 2 down in as a higher low on the 4-hour time frame, I would think of that as being pretty bullish unless we were to make some type of lower high. But until then, I would be in calls looking to continue the trend to the upside, right? On the day, kind of the same thing here. Let's clean up the chart a little bit, right? We're just 2 up, 2 up, 2 up. A little soft higher low here, but just a bunch of 2 ups in a row. So again, it is riskier buying at the tops, but we are continuing to push up every day. And if you're managing your risk properly, then you should be all right. Take a small loss if you need to, but it's better to just if you buy at the top looking for it to continue to go up like it is, and it doesn't, then it's best to just get out and wait for that higher low. And if you get out early, you live to fight another day, right? You don't put any added risk, just because of FOMO or something like that. Another thing to do is, play smaller size as well. Don't put as much money at stake when you're buying these highs, right? It can be hard to really know when that top is going to be until the top is put in. And so you don't want to be on the wrong side of the equation, holding the bag when everybody else is selling and taking profit from this huge run that we had, right? We're hitting this monthly broadening formation as well. So, keep all of that in mind as we continue to go up. It's very bullish right now, but we're pretty extended, right? Looking at the RSI, definitely above 70 on all time frames. So just got to keep that in mind. Excuse me. Looking at the week chart, there we go. We did go 2 up on the week, just poked 2 up, right? But again, just continuing to show the bullishness, getting closer to that market makers expected move high for the year of 104.59. But again, we opened the week at 95.97. We did close 3 cents below that open, so technically the week is red, but for all intents and purposes, it's just basically even where we started out the day. So we'll see what happens here. We're pretty got a nice little bump here in after hours. Up back up into 97. So seem to be pushing towards that $100 mark, and the market makers expected move high for the year. If you're not familiar with that, make sure you check out the the weekend video where we talk about the market makers expected move for the week, and that also tells you how to do it for the year. Excuse me. That's really all that we have. Not a lot to say from the month, quarter, and the year. I mean, I'll pull them up just so we can look at them. The month we made a higher low in March, and we've gone on to new highs, broke all-time highs, blue sky territory. The quarter, right? We completed the one combo 2 down, combo 2 up in that first quarter, but we've continued to push up. And then the year as well. We did a 2 down, 2 up on the year. 2 down last year, went 2 up in January. Magnitude was 70.08. We reached that, and we're way past that. So again, not a whole lot to say here. Really just got to continue to focus on the intraday trading, and that's really what we've got. So let's turn back to the 5-minute chart and look how we will attack the day tomorrow. Make sure we have our 4-hour markers on the chart. That is the overnight high, previous high a day, overnight low, and previous low a day. Overnight, we'll just leave overnight high and overnight low where they are. Let's say we open elevated from the close, but not quite a gap up. We'll say we open slightly below the previous high of day. We just want to look to see, what happens with price action, right? If we open and we push down, maybe we get a bounce off of overnight low, and then we come back up, but then we get some type of lower high at or below opening print, and we want to look to enter puts targeting overnight low. Not a whole lot of magnitude there, but previous low a day sure has a lot of magnitude. At the same time, we're in this uptrend, right? We're making higher lows on the 1 hour, haven't even had to put in higher lows on the 4 hour. So just be careful of how far you think that drop may go until we're making lower highs on, again, those higher time frames, higher intraday time frames, the 1 hour and the 4 hour, right? Now, if we open here and we push up, maybe we get bump our heads up against overnight high and pull back, but get some type of higher low at or above opening print. And we want to look to get into calls. Obviously, previous high a day is out of the picture as a target, just in relation to where opening print is. But there's also not a lot of magnitude on overnight high. So technically, that would be your exit point for the proven and repeatable strategy. But we can take a look here at the triggers and targets on the other time frames to see if there may be something else that you want to, either just scale out of and leave some runners, or whether you want to exit the whole position or keep the whole position and see if it will go higher than that overnight high, right? We'll take a look at those here in a second. But for the proven and repeatable strategy, the targets are previous high a day and overnight high to the upside, overnight low and previous low a day when you're looking at the downside, all right? Switching to the 4-hour time frame so we can get a little better idea of more of a full day trade, possibly overnight swing trade. As we talked about before, we did get a 3, bearish engulfing 3, and then an inside 1, but a bullish inside 1 for today's 4-hour or Monday's 4-hour candles, depending on when you're watching this video. So there's an opportunity for a 3-1-2 down and a 3-1-2 up. For that first 4-hour candle on Tuesday. Sorry. But obviously not a lot of magnitude, excuse me, to either one of those. A little bit more magnitude to the downside, but to the upside, we would be looking for more follow through in the continued uptrend, right? So if on that first 4-hour candle, if we break above the high of the second 4-hour candle on Monday, that's your entry. The exit is the high of Monday. Same opposite to the downside, right? Entry is at the low of the 1, exit is at the low of the 3. Again, we're hitting these broadening formations, the weekly broadening formation here, daily broadening formation. You got the monthly just above. So, look for a little bit of a slowdown to that, face ripping rally that we've been in. But again, don't get too far over your skis. There is this gap here, but SOXL does love to bounce off the top of gaps, especially when it's in a bullish state. So even if we do get that pullback, say we drop below previous low a day, I would first be looking for a bounce off of that gap before really the gap close. Now, if we push into the gap, the more we push into it, then okay, I'm looking at gap close. But initially, I'm going to be looking for a bounce off at the top of that gap. So we'll see what happens. But that's what we got from a 4-hour time frame. Looking at the 1 day, if we let's go zoom this in, let's get a little cleaner chart here. So if we go to the downside, right, we get a 2 up, 2 down. Entering at the low of this 2 up, exit will be the low of this 2 down, which is also the gap open. Also, obviously gaps like to get filled. So if you want to scale out there maybe and leave some runners to see if we get that gap fill, it's perfectly reasonable. But again, we're in this uptrend. So if we continue to the upside and get this 2 up, 2 up continuation, then we've just got some fib extensions here that are going to act as our targets, right? Let's go ahead and take a look at the notes here. We've been looking at the charts quite a bit. So for Tuesday, April 21st, 2026, there'll be 177 trading days left in the year. And we know the close price on Monday, April 20th was 96.45. So we know the week, actually the week is red, but just by a couple of cents. So, wait, no. I'm sorry. The week is still green because we closed at 96.45. It flips red at 95.97. Let me make sure I've got that right. Yeah, 95.97 flips red. But we closed at 95.94. I don't know why that was wrong. 95.94. Okay, we got that. 95.94. Technically, the week is green, but by a couple of cents. So we are basically, full time frame continuity to the upside. And we know that the market maker's expected move for the week was plus or minus $11.86 from the close on Friday, which gave us an expected range of 106.54 to 82.82. Obviously, we are at all-time highs, so there's no gaps above, but we do have some gaps below that we've taken note of. And we know that the 4-hour, like we talked about, has opportunity of creating a strat on a three-bar strat on the upside and downside, being a 3-1-2 down, triggering 93.10, magnitude being 92.03, so not a lot of magnitude there, but there is an extended target of 92.20. If we get the 3-1-2 up to the upside, that triggers at 96.27. Magnitude is 96.93, so even less magnitude to the upside, but we do have the extended target here for you on the 4-hour. As far as the day is concerned, we go 2 up, 2 down at 92.03, magnitude being 90.66. Should we get some momentum and actually get a reasonable pullback tomorrow, we do have some extended targets out here for you. But if we go 2 up, 2 up, continuing to the upside, that does trigger at 96.93, and we have some extended targets list out here for you as well. We talked about we went 2 up, 2 up on the week at 94.75, and we've got a couple of targets out here that we're looking to hit this week. If we do go 3 on the week or bearish engulfer, we'd have to go below that 75.25 level, and then we've got some extended targets here for you as well. We talked about the month went 2 down, 2 up. Same with the quarter, 2 up, 2 up, and then the year 2 down, 2 up as well. So we've reached magnitude on all of those moves, and yeah, we're just looking pretty bullish at this time. So don't try and call the top, right? That's how you can get hurt. Wait for something, a significant lower high on at least the 1 hour, right, for some type of daily pullback, maybe, and then wait for the 4-hour for maybe a swing. Overnight swing pullback, maybe a lower high on the day is what we even have to wait for the overnight swing on the pullback. Right now, things are just quite bullish. So those are your triggers and targets for everything from a scalping perspective all the way up through the 1 year chart. Try to jam in as much information as possible without taking up too much of your time. Sorry about the scratchiness of the voice and the stuffiness of the nose. So, hopefully I'll be over that tomorrow. We've had some pretty good rain, so I think that's kicked up some good allergies on me. But anyways, I hope you enjoyed the video. If you made it this far, a thumbs up goes a long way. We say it every day. We're really just trying to help the channel grow this community. We're in the business of giving out free, three, call it education if you want, but free information to, hopefully help make people's trading a little bit easier, right? Whether you adopt our whole strategy or just parts of our strategy, the main objective is that, it's just easier for people to trade, and we're doing this for free, right? With no membership fees or anything like that. So any help to help the channel grow is appreciated, and a thumbs up goes a long way in helping this community grow. And we appreciate those who continue to tune in and comment in the comment section. We do like the interaction, and we hope that everybody is doing well out there trading in this bullish rip that we've been having. So we'll end it here like we normally do. If you're watching this Monday night, we hope you get some good rest tonight. Wake up refreshed tomorrow morning. If you're watching this Tuesday morning or Tuesday during the day, we hope you got some good rest last night, and we look forward to getting out there and trading with you.